Markets really hinging on Ben Bernanke's speech at Jackson Hole on Friday. Stephanie, are you expecting more money printing?
No, I mean, we're expecting no change to what they said a few weeks ago when they said they would keep interest rates low for an extended period of time. That was a big statement, Alex. That was something that they've never really done, giving a timeline about interest rates and how low they're going to be. So I think that when that announcement, in addition, they had 3 dissenters, right? When they made that announcement, I think that makes it a very hard case to make, to bring out another QE3.
It seems like markets are really in the hopeful zone, though. So are we headed for a sell-off on Friday if we get that answer, if we just get the same response that we did last month?
Well, I think what it will do is, I think, you have the volatility, certainly. It could sell off, but I think what it's going to do is it's going to focus all of our attention back onto the economic data and what's happening with the United States. And this week we got very good durable orders numbers, and we got decent home prices. Last week we had good industrial production. Now we also had a slew of bad news too. So it's going. That's right. Prospects. So it's going to come back to the macro, I think, and then listening to what the companies are saying.
So what is that going to mean? Is that going to mean just more volatility day to day with stocks? There's going to be no real direction yet?
I think it's going to be you're in a trading range, and I think you want to take advantage on the down days to pick up the best quality companies, and we've talked about this endlessly. But what we have been doing over the last couple of weeks is really upgrading the portfolio to find like the #1 player in each industry, and really get a great price for it. Because typically those companies trade on a premium or trade at a premium relative to its peers. So if you could get those stocks like a Schlumberger down $20 from its high, that's fabulous. Or a Chevron, 15 down from its high. So those are the kinds of things I think you want to be thinking about.
I was going to ask for some other names that you have that sort of also benefit from this consistent low interest rate environment and could also benefit from the volatility.
Well, I think, I mean, again, the low interest rates, dividends, right? I mean, now you have 55% of the companies in the S&P that are trading above the 10-year Treasury yield. So that's a really big number, a very, very big number. So you can find them, and we've been buying them. It's the DuPonts, it's the Unilevers. We like IBM very much. So there are a lot of different names here that you can pick and choose. I think you have to be diversified in sectors as well. And I think the one area that's going to continue to struggle will be the banks. They can have a pop because they're so oversold, but the low interest rate environment means it's going to be continued net interest margin pressure, and I think that that's something that is going to drag down the group.
All right, thanks, Stephanie. I appreciate it. So Ben Bernanke's speech on Friday, not going to be the big game changer everyone's hoping for. Look for this trading range in the markets to continue.